Okay, well, welcome everybody to the Pipnotic Symposium, hosted on the 19th of April 2021 and hosted by FX Street. We've been doing these for quite a few years, actually, and the theory is more or less the same. We focus on liquidity distribution, hi Sunil, and we look for patterns relative to this. And so we're trying to find attractive prices in a marketplace in an attempt to locate places or price levels, price windows where people, all right, good, thanks, Catherine, where people will be looking to engage in the market. And you can do this many different ways. I like to use supply and demand theory, which I've kind of developed a little bit further, and I call it buy and sell zone theory, because you have supply and demand, and you have imbalances in this supply and demand, and this imbalance is essentially what's causing price to move. And so when you're seeing an asset price increase, then you are seeing the demand grow relative to the supply. Okay, so the supply is being consumed by the demand, and this causes the price of the asset to be bidded higher. Okay, and so this is essentially what we're looking for when we focus on the chart of an asset. And I've spoken about this many times in the past. Hey, Brian, and it's pretty much the same, the theory. And so today we're just going to run over a couple of examples and then see if this makes sense. And if it doesn't, then maybe I can reiterate some of the key points in an attempt to clarify it and make it clearer. And if you guys maybe you are aware of it or you're not, but I've moved all of my video material over to Odyssey because I like blockchain technology and uncensored information. So everything is now available on Odyssey. And so if you go to odyssey.com, you can, let me show you that actually, because it's pretty interesting. Not that. So if we go to Odyssey, just so you guys have the option to view all of the material. So I'm just going to post this here, and you guys can see where the videos are. This is where I post all of my material, and then you can kind of follow along in the stuff that I've created over the course of the past 10 years or so. Okay, so what we're going to do today is we're going to just have a look at a few different. Oh, you found it. Oh, perfect. Good. Thanks, Adinda. So we can see here that we have a ton of different assets, and it doesn't matter what it is that we're looking at. So does anyone here have something that they would like to use as an example? Post anything in the chat and we can start with that. I'll have a sip of my tea while if no one thinks of anything. All right, everyone's a bit shy today. Let's start with, let's look at this chart. This is the pound Japanese yen. Okay, so what we want to do, what I normally have is I have a multiple time frame configuration on my charts, like so. Okay, you don't have to pay attention to this down here. This is just some software that I wrote. But we don't have to pay attention to that, so we can just move that to the bottom. I'll touch on that at the end of the presentation today, so we can go like that. So if you look at this, you can see that we have several different time frames. Let me move these boxes out of the way. Several different time frames that are showing us the price of this asset on several different time frames. Here we have the hourly chart, we have the 4-hour chart, we have the daily, and we have the weekly. And I like to start everything on the macro view. So I'll always go to the biggest time frame to help me see what is actually going on with the major flows. Okay, and if you can see here, if we zoom out a little, you can see that price came all the way down here. We had a huge retreat in price. Price tested this release point, this area of demand, which is probably 6-month or monthly demand. And now we're starting to move away. When you see something like this, this is telling us that we had really low prices. So the British pound was on sale So if you were buying the British pound with Japanese yen, when price got close to this little price point here, which the software found for us, I mean, this would be an interesting time to begin to entertain buying British pounds with Japanese yens. And so when you have this information, okay, about the major flows, well, then you have a bias when you're looking on the smaller time frames. So if we go to the daily chart, you want to look for something called a buy and a sell zone. And so when you're identifying buy and sell zones, you have to focus on price levels where price came to and rejected and later was able to move through. And that maybe didn't make a lot of sense, but if you look at this, we have this here. Set that update. So we have this one here where we had a really strong move in price. Price came up to it. We came to it, but we did not manage to move through it. Price came down, and now price managed to move through it. So this area of supply is gone. Okay, and so assuming that this doesn't exist, let's assume that price is here. So price, everything from the right of my mouse does not exist. So when price moves away like that, we're told two things. We're told that here we had a period of value, and this is value or a balance in supply and demand because we have roughly an equal amount of supply as we do demand. And you can see this because price is moving sideways. If there was an imbalance, if there was more buyers than sellers, well, then price would not be able to stay in this area for this extended period of time. But so price was moving up and down, and then all of a sudden it moved lower. And so when you see this, what is that telling us about the price of this asset? Well, it's telling us that this was an attractive price, and as a result, sellers wanted to liquidate and take their positions out of the market, so they're selling. Okay, so price leaves here, we move sideways a little bit, we move down, we come back up, we come back down, and we move down to this low point. And notice that we have a box here, and this is just telling us that we had an area of demand here, so we can expect price to turn around or at least have a bounce at roughly this area here. So price comes down and then it leaves. Okay, and so what we're saying here is when we see price move away like that, you want to see those little price, let me see if I can draw and annotate here. I need a pencil. No, that didn't work. Okay, cool. That's a little bit big. Let's make it thinner. There's a thin pencil tool. Okay, so we have, when price came down here, we moved sideways and then it went down. And so what we're seeing in this little price area here is that we're seeing the same thing going on here as we saw here, but this is micro and this is macro. Okay, this is happened for, this happened for a longer period of time. This happened for a smaller period of time. And so when you see something like this happening, it's essentially we're seeing the same thing as we saw here, but this is just happening quicker. Okay, so price came down, we moved sideways, we're distributing liquidity, we're accumulating short positions, and then price moves away. When price moves away like that, like we did here, similar to the way we did here, we're telling the person who's looking at the chart that this was an attractive price. Okay, and you can see that because when price came back down here, it came back to this little price point right here, and then it left. So when you see something like that, when you see price come back down, move up, and then move down, well, this blue line is telling us where we have the edge of the sell zone, something like that. Okay, and so we have an area of supply, and the area of supply looks something like this. Okay, like so. Okay, and we can expect price to revisit this area at a future point, and there is a higher likelihood of price moving up into this area and moving down than there is price moving up into the area and just keep continuing to move through it. Okay, and so the higher probability trade would be to sell somewhere in here. Okay, so we mark off the area and we watch price. We wait for price to move into this area of supply, which it did here. Then you wait for it to tell you that is going to turn around. And you don't know if it's going to turn around or not. So what you're looking for is you're looking for clues on the smaller time frame. So if we go to a smaller time frame, the 4-hour chart, we'll find the same pattern. I'm going to zoom in a little here. Okay, so I'm going to zoom in even more. Okay, so this is where we saw it. We saw it right here. Just here, price came up into it and then it left. And so what we want to do is you want to see, we want to confirm the price is going to turn around there. So what you, oops, wrong chart, here we are. So you want to wait for price to come up here. This is not a beautiful area. So if focusing on this, you can see that we have another area of supply here, just here, price left, we tested it once, twice, and then we left. And so when you see something like this, let's mark off the area like so. Notice that price went up about 25% into this area of supply. Okay, so this is the beginning of the sell zone for this area of supply. And then we can reference this in the future. So we expect price to come to at least this area in the future. And it came to it and then it went a little bit further. So in the future, once price comes deeper, we move to the highest retest of this area of supply. And this is a price reference for the future. So now we go to where price currently is. And you can see that price tested that area and then it left. And it went up again and it held. We went through it. We started to paint these wicks above. So price did not manage to close beyond the high of this area of supply. And then we started to paint these white candles. When you see wicks above the area or within the area or at the area, then you start to see white candles form at this area. This is telling us that we are seeing liquidity change hands from the buy side to the sell side, or from the sell side to the buy side. So we are seeing essentially orders begin to get filled from this area. And so you can see this, and you know that this happened. You know that this was an attractive area because this is the candle to the left. And so what you could do is you could either sell here and have your stop above here, or you could wait for the confirmation. You could wait for this candle to close, which is essentially telling us that this asset is indeed looking attractive at this price. So when this candle closes below the area of distribution here, where these white candles are, well, this is telling us that we have a negative bias for this area of child supply. This is a child because this is established as a result of the existence of this area, which is the parent. Okay, so this is a parent, this is a child. If we did not have a parent, then maybe the child would have gone further to find a parent, to find another area of independently established supply to react on. Okay, price leaves. So now the trade is on, maybe on the open of this candle. We have the stop above here. So this is where we would expect price to go. Okay, and sometimes you don't know that price is going to stop there, and sometimes it doesn't. Okay, but when you see a candle close like this is the same thing happening here as we saw. We saw on the daily chart, where we saw price kind of sit on the area and then close below. We saw the price sit on the area and then close below. We had this red candle. Then we revisited the edge of the area and then we left. So when you see price close away, it's telling us, great, we have an imbalance in supply and demand, and we know that we should be selling, not buying. Okay, and you can see that because price managed to move below this area. If price would have gone above this area, well, then there would be a different story being told. Okay, but price went below the area. We came back, we re-referenced the edge of this area of supply, and then price moved away. Okay, and so you can see this all the time. So essentially what we're looking for is we're looking for these areas to get formed. This is not a pretty area at all, but we're looking for these price patterns where price goes up, it moves, or goes down, it moves sideways, and then price manages to close beyond it. And then this will be a reference point for the future. Okay, first of all, we had this one here. And then when we see something like this, then we know that we do not want to be selling for a price any cheaper than the high of the highest test to this area of supply. And this is not supply on this time frame. This is maybe an hourly supply. Okay, so micro supply. Okay, and then this is the edge of the sell zone for this area of hourly supply. Because I'm saying hourly because it's not very, it's not showing a lot of strength on this time frame. And then price came to it, went a little bit further. So now we have this as a reference points into the future. Price came to it just here. We went up, we went up, we went above, we came back down. We closed below the edge of the box, and then we closed just here. So the trade is on from this point here. And you can wait for confirmation, or you can put your limit order in and you can sell at that area. But what I like to do, and this is something that you guys can now use, is that I like to look for this. This to me is really important information. Let me zoom out a little bit so we have more data. Boom, boom. So what I like to see here is I like to see price reach an area that is quantitatively high. And you can see that in something like asset strength. This is just a piece of software that I've written, and I'll show you where you guys can use this for free. But it's showing you on the chart that, wow, we are actually reaching an incredibly high area in price. This is high relative to historical values. And so this is kind of a mean deviation reversion tool. But when you have an area of price sensitive prices and you have an extreme deviation from the mean, which is the orange line, the red line, sorry, the yellow line here, then there's a very high likelihood that price is going to turn around. Okay, and this is when we have a confluence of these factors. We have price reaching a pool of liquidity that is very likely result in an increase in sellers. And we also have the value of this asset, which is reaching very high values. Okay, and so waiting for price to come up to this area here and then begin to break away either in price or in the value that you can see here gives us a lot of confluence. Okay, and so what I've done is, if you go to this website here, pipnotic.com/dashboards, and then here there's one called asset strength. I'm still building the other two, they're not finished, but this one here is finished. And so what you can do is you can go here, I'll put the link in here. And here we have the asset strength, which is essentially the same thing. And so here it's telling us what all of these assets are doing. Okay, we only have 25 at the moment, but we have all of these currency pairs, and we have some stocks, and we have a bit of crypto, we have some exotics, Cisco and Eon and lots of other ones. And so essentially what I'm doing is I'm taking this information and I'm using it to help me identify or filter or shortlist assets to trade. And so if I want to look at this one, I go to the Kiwi Canadian dollar. I'll just do that. Move this box down here, Kiwi Canadian dollar. And I move that here. And on this one here, if we look at, not that one. Let me reload this here. So if we go here and we look at the Kiwi Canadian dollar, we are looking at the daily. So this is daily asset strength reversion. And so I go to the daily chart and I look for a place to sell. Moving in, okay, let's have a look here. So I'm going to look to sell. You can see the price is poking up into this area of child supply. And this is a child because when this area formed, it almost formed as a result of the existence of this. So I wouldn't sell here, but what I would do, I would feel more comfortable looking at this area here. Okay, so I would look for something like that. So the information on this page is telling us to focus on, actually let me remove all these windows open, there we are. So I'm looking at this and I'm using it to tell me what to do. Okay, let's have a look at another example. like the American dollar, Japanese yen, I can see these settings are different because I am seeing different configurations. So what it is, we have a very low reading, and we were told to buy. We just left the buy area here. You can see just here, we just left the buy area here. So we were told to buy somewhere around here. And so on the configuration for this is running on the server, we were told to buy, and that signal is still in place. And so we wouldn't be selling here, but we were looking to get into a trade and get out at roughly this area here, okay? Because it's green, this is telling us to buy, red is telling us to sell. So if we look at another example, this is the American dollar, Canadian dollar. Let's go to the hourly chart. American dollar, Canadian. This is an hourly area. And this is a buy. And it's telling us that we should look to buy. And so if you look here, you can see that, I mean, this signal has been telling us to buy all morning. But we can't see on this time frame what price is reacting on. So we have to go to the slightly bigger time frames. And you can see here that we have these buy zones. Okay, so if we have, you have this area here that was tested, rejected, had a couple of attempts to go through it, price failed. We actually have this one failed. This candle closed above it. The lower the candle is here, and we have here. So we have something like this. This is very messy. And we have parent, child, child, child. So there are lots of nested areas in here. So what I would do is I would take the lowest one here. And you can see this is the one where price left. We had the first test. This is the beginning of the buy zone. Let's just mark that area off. Let me zoom in a little bit. I have the sync charts tool on, so it syncs everything on my chart. So we had this one here first of all. So this is the most expensive price we would pay. Price came down here. We came a little bit deeper. Okay, so this would be the reference point for the future. Price almost came to it. We failed. The next test, price came to it. Okay, and so this is essentially what we were seeing. Rather, this is essentially what we were being told here on the 1 hour chart. So you go to the 1 hour chart. Let's just take this one and put it on the 1 hour. Then you can see the details of this. And it's probably a little bit clearer as well if we go all the way back here. Yeah, see, this is where we have this area here, because we had a strong push in price. Price moved up, sideways, and then we left. Okay, so this would be a more interesting area. So this would be an area that would be interesting to trade. The beginning of the buy zone is here. Okay, price didn't come down. This is the parent. Here we have a chart. We're testing this, and this one tested this chart, and so we have a lot of areas on top of areas. And when you see stuff like that, you have to be careful, because price can easily move through these to the origin of the move that is responsible for removing historical areas. We had this area here. It was tested. Price came down. We moved up. We moved sideways. And this is the origin of the move that removed this hourly supply. So this is where we look to buy. So remove. So this is where we'd look to buy. The beginning of the buy zone is here. But you couldn't really see that on the other time frame, on the 4 hour time frame. Okay, so this is where we'd expect price to go. On the hourly chart, we're being told that we're looking to get quite close to that area. Okay, so that's really interesting. That's really interesting to us. Does that make sense to everybody? Super good, Sunil. Super good. All right. Okay. Perfect, Matthew. Good. Okay, so I mean, here we have another example where we have the old school. We have an area of demand that is formed just here. Software found it beautifully for us. Good, Brian. You can see how price left. When price left here, we managed to move this micro supply. And I know this is supply because when price left here, we tested. It's telling us it's price sensitive. Then we moved away. Price rallied, accumulated, and we went through it. Okay, what area did it? This one did here. This is the buy zone. We left and we went up here. And we came down, we tested it once, twice, and now this one has been removed by what area? By this one. And the software told us this. The software told us this. Let me tell you, I'll tell you exactly when it told us that. 2. It told us that we should sell here when this red bar closed. When this red bar closed, this box was drawn on the chart saying sell here. How did that work out? Worked out really nicely. Okay, and if you don't have the software, it doesn't matter because you can do the analysis manually. Okay, and so we have another example just here where we have a lot of levels on top of levels. I don't like this stuff at all. This makes me a little bit uncomfortable. But this is a nice one. Actually, this is the one we just saw where we had this area here, price left. When price left here, we managed to move below this low here. We also had this continuation pattern, which removed this tiny micro demand, tested, removed. This one was removed by this one. Price went up, and price, when it tested here, we moved below this. So price left. So now we have this one that's been established. The area, the white candle before the removal of this area here is right here. Price left. So you'd move your box from here to here, like this. Okay, so this is where we'd expect price to come to. We had a parent, debatable, an older sibling or a parent. Price tested it. We had a child. This child was tested by this one, and then this is where price came to almost to the pip. So it's really, really powerful stuff, and it's pretty simple. All you're doing is you're looking for areas, price levels on a chart that have historically been respected and then been removed. And then you're asking the question, well, what area of supply or demand removed this area? Okay, looking for the origin of the move. And you can see this one here was tested once, parent, child was tested once, twice. And in this area, this candle here went through this one, and the white candles before this that removed it are right here. So like that. It's kind of a messy area. Okay, and so this area held for a test, but now it's gone. What area removed it? This one here did. Oops, so this one here removed it. The edge of the sell zone is the high of the candle that left the area. So this is where price goes to, and then it leaves. Okay, so price moves away. Now it's been removed. You can see here. Now price just moves away. Okay, and so now price is trading between this area here and the highs of these two peaks just here. Okay, and then price continues to move down. We have these low highs, and we finally move through this area here, which tells us that we have an interesting, attractive price for the American dollar, Canadian dollar from this price point here. And we know this because this was the one that caused the damage to the structure of the market. Okay, so, okay, shall I have a look at something else? Is there something that's on someone's radar right now that they're contemplating or thinking about? It can be anything. We have lots of symbols here. Crypto might be on a lot of people's minds. Let's have a look. Crypto. Here. Show. BTC. Cool, Brian. BTC here. Let's have a look at this. Let that update. Oh, it's ugly, isn't it? My pleasure. It's ugly on an MetaTrader platform because the weekend gaps. It's not actual Bitcoin. It's traded as a CFD. So quite different. So if we have a look at this, have a look at the weekly chart and you see what's going on. Wow, there's a lot going on. And if you guys go back to the videos that I did, you can find them on Odyssey. I think it was back in 19, we were all the way down here. We were talking about this price area just here. I think it was the 3100 or the 4100 here. Price came down and it absolutely went to the moon. So anyway, just looking at this now, I mean, where do we have areas that were tested historically and then removed? We have a very clear one here. Okay, we have this one here. We have another one here. We had kind of price moving up, then down, price went up, and then left. So this is the beginning of the sell zone, which tells us that we've got something here that could be interesting. That's pretty far away from price. I mean, if price came down to 20,500, I think a lot of people would get pretty excited. And I don't see that happening in the near-time future, in the near term, because you can see that price is trading pretty efficiently higher. So if we go to the slightly smaller time frame, hey Adney, Afonso, I'm using my own ones, the Pipnotic supply and demand, the Pipnotic asset strength. These are ones that I wrote, and you can read more about those. Pipnotic.com. The asset strength is available here. You can just come to the dashboards and have a look here, and you can find that here, and that'll help you or qualify areas that you wish to trade. And so, I mean, where do we have the same thing happening? We have that happening. A really attractive area is right here. You can see, because we had, let's zoom in a little. I could do it here. Boom, on the daily. Okay, so we had kind of messy, but we had a rally in price. We had a white candle just here. Price went up, price came down. We went up, we did not move above this area, but we started to feed deeper. So we had this is the buy zone. You can see here, price went to it, but we did not manage to move through that area. So that's still in play. What we did manage to do on the opposite side is, where did price move from? Let's remove this one here and then use this to identify our supply. We had this here. Like so. Price tested it once, twice. Where did price consume super good supply? Because when price left here, we did not manage to consume opposing demand, but it is price sensitive, because when price left, we gapped down, we tested it, we failed. When we left the sell zone here, we managed to move below the previous low. And then price started to paint white candles. We're deep into this area of demand, and we started to move higher. And we had the candle that left to move through. But what white candle do we have below this candle that removed this? This is still untested. We have that right here, just here. So this is a really nice price for Bitcoin, the 38,264. And this stuff here is a result, this move lower in price is a result of, I think it's the US government cracking down on money laundering. There's an article on Zero Hedge that you can have a look at that discusses this, but this is what we're seeing here. So this increases fear. When people are fearful, they liquidate positions and move to cash. And so this is probably what we're seeing here. This is also the weekend gap. What are we? Here we're Monday morning, or Monday afternoon, sorry. So this is just like that weekend gap on the CFD charts as we have here. But price left here, this is a beautiful area. And where do we have the buy zone? Well, the buy zone is here. Okay, and when you have a big gap between the buy zone and the actual demand, then price will have to work really hard to get here. If these are really close to each other, it doesn't have to move that hard. But when it's that high, price is going to have to really, really struggle, which tells us that this is a very high probability price point for Bitcoin. Okay, will price get there? we don't know. That's really far away from price. But Bitcoin trades like any other asset. When price is high, people take the money off the table. When price is low, people are buying. So again, it's just a constant balance between supply and demand. Although I must say that because of the quantitative easing infinity, I think a lot of people who have cash are losing faith in many central banks' ability to do the right thing, to let systems fail when they grow bigger than they should. And this artificial propping up of the economy is making people quite nervous about holding any real reserves of cash, especially currently in the US dollar. There's a lot of really weird stuff going on. At the moment regarding the Federal Reserve, and this is happening not only in the US, but it's happening all over the world. There's a lot of strange things going on. If you consider as well for the moment, I mean, unemployment is moving up. People are losing their jobs. People are going bankrupt. People are closing their companies. Does that sound like a healthy economy? It doesn't. And so you ask yourself, well, why is the stock market moving higher? And the central banks are buying the stock market to support the stock market. So this is artificial stimulation, and it's unsustainable because they cannot keep buying the stock market, printing money in an attempt to support the economy forever. It will have to fail. And what we will see very likely in the not too distant future is hyperinflation in the US and any other place where they're printing excessive amounts of their currency. And this is going to cause prices to increase, and this is going to work even more against the economy. So you just have to be really, really careful. And so Bitcoin is a store of wealth. You can move your money into Bitcoin if you're uncertain or a little bit nervous about a central bank's ability to look after your money. There has to be a high degree of trust, and I think a lot of people have lost trust these days. And so I think people are looking for something where they can have their money in some kind of a store, so the value of it is slightly more secure than an out of control central bank, which is what we're seeing pretty much across the board these days. Paul is asking, what's the name of the website again? Which website, Paul? If we have a look on the 4-hour chart here, you can see something similar where we had, here we had another one. This is a really nice signal that was done. We had this area here, and this is an area here because this caused price to trade below this area that was tested once, twice. The white candles prior to the one that moved this supply is here. Price went here, like so. Found it. Price came to that area, and then we left and we moved away. Okay, we had this one here as well, where we had, if we try and find that area, here we had this, the high here, we tested, failed, tested, failed, tested, failed. What area removed it? This one did here. And so we actually have this here, the beginning of the buy zone is the low of this candle, and price fed into this 4-hour demand, and now we're wriggling higher. So we don't know what will happen, but it looks like that. Actually, sorry, no, we're down here. We cut through this, so this is actually gone. This is the weekend gap, and so now you want to look for supply that remove this demand. So we'll have to go to the hourly chart, and here we have it. Oh, it's difficult, isn't it? It's really ugly on this chart. You have these weekend gaps on these CFDs, which is not so interesting. It just makes it difficult to do the analysis properly. So you might want to go to a different charting platform to find that and see where Bitcoin is trading properly. But here we have another thing where we had this area here. We had this area just here. Price tested it. Beginning of the buy zone is here. When price left this price point here, it moved through it. We tested that area. It moved away. So we have something in here, and we're just marking off where we had turning points in price. So we got something here, let's say. Okay, price tested it, and now it's gone. What area did it? Look down, this one did here. So we move this down here. Okay, come on. Okay, so this is what we have. So this is one that did it. This is where price came through. So this is that area that we saw on the other chart, on the 4-hour chart. And here we have the buy zone. Here we went a little bit deeper. Here we came back to that area and we started to grind through that. So when this happens, we're consuming liquidity at the area, and this is when we move through. And when again we have a pretty good gap between the buy zone and the demand. When you see this is normally when we see really nice reactions, because price really has to work hard to get down this far. And this is a result of that. Okay, good. Well, I've been rambling now for 42 minutes, so I thought maybe we'll open it up to some questions if you guys have any questions, and if not, then we can call it a day. So does anyone here have any questions? Clear my charts here. Any questions at all? No. Well, that was easy. That was easy. Yeah, so, okay, cool. Adinda, you put that in there. That's beautiful. So you guys can go here and you can have a look here and just upload it now and again. I've got 25 entries there now. It's going to refresh that. And there it is. There's still 25. Good. So here we have a lot of stuff here. So you can sort here on the time frames or the assets, and you can search in here. So if you're looking at Ethereum, is there anything there? Nothing there. What about the Kiwi NZD? You get all the Kiwi pairs here. Okay, so you can just grab these and jump to the you can jump to that chart and have a look. But you can yeah, just keep your eye on those. Maybe they're interesting. If you have any questions about it, let me know. I'll just put my email in here. So if you guys have any questions, you can shoot me an email. There we are. Good stuff. All right, Adinda, should we, if no one have any questions, I think maybe we can wrap this up. Hey, thank you so much, Adinda. All right, I think we'll call it a day, but thanks everyone so much for being here. If you have any questions, shoot me an email and check out this the link to my website, and maybe you can get a bit of value from the information available there. Super perfect. All right, everyone, FX Street, thank you so much. Everyone, thanks so much for being here today, and have a lovely remainder of the week.